Okay, good afternoon. Today is Wednesday, 21st day of August 2013. This is the after show. The radio broadcast ended some time ago. We typically do an after show each day. I've taken a long break and I'm back now to look at the charts because we had the Fed minutes today. Huge move down. I just had a question from the chat room. What was it you were saying about Mike Reed's theory on what happens after an economic report? Okay, now this would apply to like the Fed announcements, the Fed minutes, any other really big economic report, is that the initial knee-jerk reaction of the markets. In other words, it comes out and just boom, the market, goes in one direction or the other, up or down. In this case, it ran down, way down. Put in a swing low at 36 and a quarter. It then retraced. His theory is simply this, that the initial reaction of the market after the retracement is completed, that's what the market will ultimately, it will end up. And so in other words, it will do this. In this case, it did that initially, and it did that. We even ran higher than we were when the announcement came out. Now the market will do this. Okay, just that same little pattern there. Now I have to stand by my philosophy, which is I don't trade the economic reports. Some people do, and they do it very well. That's their thing. We have a trader that's on the show maybe once a year, sometimes twice a year. His name is Michael. He trades an incredibly huge size, like 10,000 Emini contracts a day. He doesn't put them all at one time, but over the course of a day, he'll trade that many contracts. It's kind of hard to even fathom, but it is a verifiable fact. He doesn't come on to brag or boast. He's not that kind of a guy. He's a very low-key individual. But he specializes in trading news, any kind of news. If it's Google's earnings or, the oil inventories that come out every week, any kind of news, that's what he tunes into and what he does. Now, he has other types of trading that he does, other styles, but that's really that's his thing, okay, is trading the news. I stay away from the news because for me it's difficult to, well, first you've got to interpret, is it good or bad, okay? And then you've got to figure out how the masses or the hive mind is going to interpret it. Because you might see it as good news and other people might see it as bad news. And even if you both see it as the same kind of news, how will the market react to it? I've seen the market run up on bad news. I've seen it run down on good news. And so it's one of those, it's kind of like when I wrote last night on the Facebook page about trading tools that are inconsistent. I'd rather have no tool than an inconsistent tool. And that's how I am with news. Sometimes I can nail it, and other times I don't. And so it's better for me to just leave it alone, because I can't get any consistency. Now this fellow Michael X, we don't give out his last name on the radio because he had a lot of money and whatnot. And some people like their privacy, and I don't blame him. Were it not for what I do with the radio show and all of this, I'm actually a pretty private person. I'm certainly no social butterfly by any stretch. I've always preferred to be kind of the man behind the curtain. But anyway, that's a whole nother story. Now, the question that had been asked, which prompted me to turn on the recorder, because I thought if we're going to do any kind of a teaching moment, might as well take advantage of technology and just record it so that someone else who's not here right now can also benefit from it. And the question was, well, there was that question about Mike Reed's theory on the initial move after an economic report. We've covered that. The next question is, how would you interpret the 1 hour candle on the gold chart? Okay, we'll go to that right now. I just want to say that I did go ahead and put that tweet out. Consider being short the SP 500 E-mini futures below 1635 if the opportunity presents. Watch for the zone below. The current price when I tweeted it was 1637.75, and so that hasn't triggered as of yet, but it may shortly. That would be right here, 1635. Now, what are the obstacles to this trade? What do we have to worry about? What do we have to be concerned about? Obviously, my target down here, the weekly trading zone, 2930, that's an important area to me. But I always recommend, don't try to squeeze every last tick out of something. I mean, if it's running hard, then okay. But if it starts, fidgeting down here, then go ahead and take your trade off, because from 35 to 31, I mean, that's 4 points. Quite frankly, if it started to fidget at 32, that's 3 points. Okay? So I left it open-ended. Take what you're comfortable taking out of it. Once it gets down past 2 points, you have to consider bringing your stop to break even. At the very least, if you're trading multiple contracts, then you unload some of those contracts and possibly still get your stop to break even. Okay. Okay. Thanks, Eugene. Eugene was commenting on how when price did that move back up after the announcement, how it ran right back up to the weekly zone at 53.54. It did, and it'll do that. That's the zones. They have a magnetic attraction, and I call them the zones. And keep in mind, I didn't invent the zones. I mean, I found a unique way of looking at the market that allows me to see certain area price levels that I think that will attract buyers and sellers, and they'll congregate in these areas and make up their mind which way they're going to go. And then on a move like this, they'll get stopped there. So now let's go to that gold. The question is how would you interpret the 1 hour candle on the gold chart? Let me get a gold chart up here. Don't I have any chart I can use? Ooh, look, we're back testing that 1302 again on the beans. Remember? We had the nice tweet, good for 17 cents. Came back, tested the important area, 1302. Gave up another 9 cents. Okay, now it's back testing it again. So we had one nice trade, two nice trades. We could have a third one setting up right here. Okay, boy, I need one more chart is what I need. Oh, I'll use this bond chart because we're not using that right now. Okay, let's go GGCZ3. That's daily. You want hourly. I assume it's this big one here that you're asking me to give you some information on. Who asked that question? Jerry. Okay, Jerry. Well, let's do that. Let's look left. Now this previous swing high, and when price came down, it ran up. Let me ask this. When you say, how would you interpret the 1 hour candle on the gold chart? I guess you're asking, do I believe that that leads to lower prices or higher prices? I would say lower prices. And now that's kind of easy to say since we've had, 2 down hours since then. But this is a doji, okay, and a doji in the proper context is very meaningful. It's one of the most meaningful candlestick signals. If you Google, not right this minute, or if you want you can right now, Google CFRN and doji. I've written a couple little, just short pieces about the doji, but there's a world of information out there on dojis. The best reference I can offer you on candlestick signals is the guy that I got my training from, Steve Bigelow. His book that I have, High Profit Candlestick Patterns. I've read that book till the pages fell out. Honestly, I did. There's 12 major signals. There's probably 100 different signals, but there's just like 12 major ones. If you get them down, it'll serve you very well. Steve Bigelow, High Profit Candlestick Patterns. You can buy it from Amazon or from his website. You might be able to find it in a local bookstore like a Barnes & Noble, or did they go out of business? You might even find it in your local library. Although this is the type of book you would want to own because you'd want to have those examples to be able to refer to all the time. Now, a doji is important based on context. If price is going sideways, like this, if price is just going sideways, you know what, instead of drawing, let me see if I can just find a real example. Well, okay, like see how price is going sideways? This little doji here, okay, that doesn't have any meaning because you're in a sideways market. What you want is you want a market that has had a really nice rally. See, after this big move here, a doji right here would be meaningful, or up here. Well, here we go. Here's a great one on the downside. Okay. Price is coming down. That is a meaningful doji because the context is proper. And by context, I mean you've had a nice move down. This doji leads to higher prices. Well, you say, well, what about this one? Okay, the context was not right for this one. Look at the slope here. Okay. Actually, that's like a continuation signal because you've had this move down, price pulls up just a little bit, puts in a doji, and then continues on the way down. But this is a reversal doji. A reversal pattern, it's 3 candles. The red candle is red. The first candle is red, it closes down. Then you have the doji. And then the third candle of the pattern is a bullish close. Do you simply buy the open of the next candle? You can. But what Steve recommends is that you wait for the next candle to complete. If that's bullish, then you buy this candle. Okay. Okay, here's your downtrend. Red candle, doji, wake up call. You could actually enter on either one. You could enter on that one right there. Okay. Now, where's your stop? Got to be a couple ticks below. Hang on, guys. I'm in a chat with somebody in Bangladesh. I've got to get this completed. I'll be right back. Okay. Is that a bearish engulfing? Here, Jerry, is this the one you're talking about? Bearish engulfing right here? No. Let me show you what bearish engulfing looks like. Bearish engulfing is like this. Okay, there's a candle, 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 candle. I exaggerated that a little bit. Candle, candle. Okay. Bearish engulfing, you have an uptrend. Can be any number of candles, but it's a defined uptrend. If you're looking at an hourly chart, you look and see what the average swing is. See, look from here to here. You count how many points that is. And then this swing, and then this one, and that one, and that one, and that one. You'll go through about 20 swings and figure out what your average swing is in a market. That gives you an idea of when you should start looking for a potential spot that the market might turn. So price is climbing, and then you get a candle that has a higher high than the previous candle and a lower low than the previous candle. That is a bearish engulfing pattern. This candle will close red. It could close green and still qualify as bearish engulfing, but it doesn't have the same meaning, if it closes green. You want this candle to be red. Green, green. There can be some red interspersed as it climbs. Now this works on a minute chart, an hourly chart, a daily chart, a weekly chart, doesn't matter. And then if you get a bearish close on this candle, you're selling the open of that candle. Okay, I've been talking with my microphone off for some time now. Would somebody please tell me the last thing you heard me say? I pulled a Michael. I'm done with my chat, so I can really focus. All right, well, anyway, here's the bearish engulfing. So, Jerry, you were spot on. I was over here drawing stuff, and there was a beautiful one right here. Bearish engulfing. Some guys say the body has to be above the high and below the low. I disagree. I think the wick qualifies. You buy, this is your confirming candle. You want that to be bearish, and then you sell the open of the next candle. Whether it's a 1-minute chart, an hourly chart, a daily chart, it's always the same. Your risk, your stop loss, has to be just above the swing high. In this case, you would be selling the open of this candle, 1367.10. Your stop loss would be up at 1380. That's about $13 in gold. That might be, more than your risk profile permits. So what do? Well, this is where the slingshot can come in, because here we are on an hourly chart. We have a well-known chart pattern. Now, I'll be honest with you, this would be a better pattern if price had been slowly climbing, for like a day, right? And then you get this pattern. Okay, see, the longer this climb, and then the bigger this candle, the more powerful the signal. But this is doable. Okay, probably this swing low here is probably about as far as we're going to go. But let's work with this. We know that our entry should be this candle closing bearish confirms that we want to be in a short position. But we can't handle $13 of risk. Our account size does not permit that. Alright, so let's go to the 4-tick range. Now this candle closed at 1367.20. 1367.20. I'm going to write that down. 1367.20. That's where that candle closed. Now let's go to the 4-tick range. Gold. 1367.20. Right there. Okay, now see the time here, 13:04. This is 1300 hours here. Okay, so this is the little this little wick that's sticking up right here. That's this right here. Okay, just make sure everybody understands. This is this. Here, let me fix this chart. Okay, so we have a bearish cross that's already happened. As we move into the next hourly candle, we're taking our signal from the hourly. Now, look what happened. Price comes down to 67.20. We get a pullback right here. We already have our bearish cross. That happened way back here. This happened at 13.70.60. The sellers, the bears, took control on this time frame. See, the swing low here is 13.67. We got to wait for that hourly candle to close. Now, but the hourly candle has now closed when we get this pullback right here. So the question is can we trade this pullback? All right, here's the candle that touches. We look down. Do we have bearish divergence? We do. It's not the greatest example of bearish divergence, but it's bearish divergence. Anytime you can point the arrow down towards the cycle, that's bearish. It's blue, so you got to have a trend line. So we take our trend line tool, draw it up across these bottoms. Then we need a down close below the trend line. That would be this guy right here. Okay. Here's the deal. Look what happens on this candle right here. The step line gets drug into the green line. Now on this down close below the trend line, see, on that down close, you hadn't really touched it, but here you're selling the open of this candle, but you're hitting it. So as beautiful as this looks, I'm going to say that based on the rules as they're established, this is a pass. Okay? Is there anybody with experience want to offer their thoughts and opinion? Because it's really I mean, it's beautiful, but it's disqualified. Okay, and sometimes that'll just happen. Trades that meet almost all the criteria, go on to do exactly what you thought they would do, but if you start making exceptions, pretty soon you end up, you don't have a system anymore. You don't have a methodology. Oh boy. And here we don't get a complete pullback. Here we get a pullback. And because the cycle has changed colors, got to have a trend line. And if we draw that trend line, well, we can see that the step line again prevents us from being in that trade. Okay, so there's no short trade there. Now we have a bullish cross. Now we need a bearish cross. And so we got no trade. Not yet. We know where we want to trade. We want a short trade. So this has turned out to be a very good example. Okay. Based on the bigger picture, this bearish engulfing pattern, we know that we want to be short below the low of this candle, 1366.80. did I come up with 67.20? Oh, that's where, no, that's right. That's where this candle closed. This candle closed at 1367.20. That's exactly right. So we want to be short below 67.20. Okay. And on the slingshot, we've not had a legitimate opportunity to get short yet below 1367.20. It was a nice move. But it got disqualified. And so you wait. Now, the reason we went to the 4-tick range, remember, we didn't have to go to the 4-tick range. We could have traded this simply as a chart pattern, okay? But that required you having to put your risk way up here at 1380, which is like a $13 stop loss in gold, and well, frankly, that's a little much for some people. Although if you're a gold trader and you trade a larger account, you know, swing trader, position trader, that kind of thing, then it might be perfectly acceptable for you. Again, a better bearish engulfing pattern would be after a long, steady climb. That's kind of a sideways up there, but there's enough. There's enough of a, I mean, this is, we're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours. And the size of this thing is, but again, this isn't a normal market. This was created by a news-driven event. So this candle itself is exaggerated. Now that the market has settled down, the ensuing action is not going to be exaggerated. The only reason this candle looks like that is because of what happened with the news. Okay, does anybody else have any other questions about anything at all? Let's go back and look at the ES. Okay, the ES still hasn't triggered on that tweet yet. Markets, no, they're still they've reopened. Okay. So again, just a little tweet we put out. Consider being short below 1635. The opportunity presents. Watch for the zone below. Current price 1637.75. Since we tweeted that out, price has dropped 2 points from 37.75 down to 35.75. And we'll be looking to trade it from 35 down to 32, 31. We're getting into a quiet time of day. Volatility picks up a little bit once Asia opens, and then after you get that initial little shot in the arm, it gets pretty quiet until the London Open. It's really quiet right now. Jerry asks, I wonder if we'll get another sell-off during the Asia and London session. That's a great question, and the answer to that is probably. Okay, Wall Street has had its opportunity to react. Now Asia and London, they will have their own reactions to this news. The only difference is when Asia opens and when London opens, it won't be news anymore. The global marketplace has had a chance to digest it. Now there may be some positions that were, you know, stopped out, or some things that have to be unwound because of, the drop in the market. So when those markets first open, You might see a jolt, but it should be pretty short-lived. Like if their markets are going to drop, it should just, you should see it right away, and then they should level off. Because the news it's by the time their markets open, it's just no longer news. All right. Is there anything else? Oh, let's take one last peek at soybeans. Okay, we've come back to test the tweet at 1302. Can't stress enough the importance of, we had a tweet, consider being long above 1302. It was good for 17 cents. We came back, we tested 1302, just so happens to the penny, and we ran up to 1311.75. So that was a 9.75. Each penny worth 50 bucks, the equivalent of 1 point in the S&P 500. So now we're back testing 1302 again. And soybeans, they won't reopen for a while. They're closed. So when they reopen, we'll see if we get a third trade out of it. On the crude, and going back to last week, we had that tweet at 106.75. This is an hourly chart. Oh, we bounced. Now each one of these moves up was chock full of slingshot trades to the long side. I think it was this day here that I walked through all those trades, one after the other. Then we came back and tested it, made another run, tested it, made another run, tested it, another run, and then I guess it was yesterday that we fell through. Support became resistance. This is a great example. I mean, if I were going to draw it out, I couldn't have drawn it out any better than this. It won't always be this perfect, but sometimes it will be. Okay. Any questions on this? Any question on the beans? I'll let you guys go if you don't have any other questions. I don't see any more questions in the chat box. If the markets overseas take it hard when they reopen, Asia and London, if we take out 29.30, we do have a final zone on the downside. It's way down there at 15.95, 96. Today being only Wednesday, it's certainly possible that we could see that by Friday. Not a prediction that it will, just that there's certainly enough time for it to get there. Is there a wide spread on the beans? During the day session, Jerry, no. Normally it's 1 penny. On the overnight session, it can go to a penny, a couple pennies, 3 pennies. It depends on how active the beans are on that session. But watch them tonight, okay? Pull up your chart, pull up your DOM. I'm sure it looks very quiet right now. Let's go. Considering they're closed. It's interesting. We don't show anything on the bid side right now. Where are those? Where are those buy orders? It says there's 145. For some reason they aren't reflected. The ones on the sell side that tally up to the 76 number, you can see them. It's odd. Which brings up another good point too. The beans trade in increments. There's 4 ticks per penny, just like there's 4 ticks in 1 point in the S&P. Each tick is $12.50. 4 ticks makes 1 penny. And so when I said the spread was a penny, Jerry, I guess what I was really meaning to say was the spread typically is only 1 tick. But overnight it can go to 2 ticks. I guess I've seen it probably as wide as 3 ticks. Do any of you guys have a real interest in trading Forex? Every now and then the question comes up and we talk about it. Okay, CW, tell me, give me a if you can, if you want to, a reason. Why does Forex appeal to you? Does it? I don't want to put thoughts in your head or words in your mouth. Tell me why it appeals to you and why you would like us to pursue it. Okay, the answer was low startup cost. You can open an account for $1,000. That is true. You can open a futures account for, I think the minimum to fund a futures account is $2,000. Jerry offers, I know that the Forex doesn't require overnight margin. Pete offers $4 trillion traded daily in Forex as well. That's true, Pete, but keep in mind that the bulk of that, like 95% of that, has to do with the banks and the stuff that banks do. Now, I'm no expert on this, and so I won't pretend to be. I just tell you I don't know, but I do know that almost all of that $4 trillion that the Forex sites advertise about, you as a retail trader, you're not participating in that. You're participating in something different. But it makes for great ad copy, okay, when you're pitching the Forex market. Now, I'm not saying the Forex market isn't real and there's really people trading and really people making money. I know people that trade Forex, and they're happy trading it. I was going to trade Forex when I got into futures. I met a fellow by the name of Dave. Oh gosh, what was his name? His company is I do remember his company name. Hang on. Dave Floyd. That's his name. AspenTrading.com. I haven't spoken to him in years. He was a really nice guy. He was on the radio show, one of my very first guests. He was going to teach me how to trade Forex, and I got into this nightmare trying to open my Forex account. I sent a corporate check out, but I was trying to open the account in my personal name, Dwayne Reeves, but I used one of my companies. I used a corporate check. I mean, I was entitled to the money. That wasn't the issue. But it messed everything up in the back office at Gain Capital. And that's who Dave Floyd cleared his Forex trades through, and so that's who I was going to. So I had a $10,000 check that was tied up for, gosh, I mean, like once it got into their system, I couldn't open an account and I couldn't seem to get my money back. Nobody was trying to, take anything from me. It was just a snafu. And I got aggravated, and so it's part of why I ended up trading futures instead of Forex. Honest. Yeah. So, but anyway, Dave, I guess he's still around. I guess he still owns the company. Is there an About Us? Oh, partners, or the Aspen team. There he is, Dave Floyd. Really, really nice guy. I mean, I only know him from the conversations that we had on the radio. But when I first contacted him and asked him to be a guest, he said, sure, I'd love to. And he came on. And then I went down the Emini rabbit hole. And here we are talking about it 8 years later, roughly. Wow. Jerry says you won't lose more than you put in. Well, you know, in futures, they always say that. You know, trading's risky. You can lose all your money and then some. I don't know anyone that's ever lost more money than they had in their account. I mean, they say that, and obviously they say it for a reason. I just don't know of anybody it's ever happened to. Okay, so now the person who said they were really interested in trading Forex, CW, tell me this: what pair, what currency pair would you trade, or do you trade, or do you have an interest in? Is it the Euro USD? Yep, Euro USD. Okay, let's take a look at it. Now, remember this trade over here on the gold, this thing's still cooking. Before let's go back here real quick. 1367.20. We're below that, so if the 4-tick range, whenever it gets going again, if it gives up a short trade, then in fact, I'll talk about it tonight. Talk about on the blog. Gold short off the bearish engulfing. Just making a note to myself. I'll look at this tonight. We'll recap it and see if a trade ever materialized out of it. Okay, so we'll go back here. Get rid of all the drawing objects. Euro USD. Now, I'm told that the 4-hour time frame is quite popular amongst the Forex folk. Now, let's do this, do this. And let's do this. This. Okay. So we get a bullish cross. Price pulls away. Price pulls back. Make sure it pulled back. Yeah, just barely, but it touched it. The cycle is blue, so we don't need a trend line. All we need is an up close. Bullish cross, price pulls away, price pulls back. So we get the pullback and the up close in the same candle. So what we're doing is we're buying the open of this candle, which is, boy, that's a lot of numbers. $1.333 07? Did I get that right? Okay, the open of this candle. Open 13307. All right. And so then the swing high of the same candle is 133757. Now, correct me if I'm wrong, because I don't trade Forex. CW, the way you calculate this, all I need to worry about are these last numbers, right? This went from 307 to 757. So did this thing actually move 450 pips? So this was this candle here represents a 450 pip move. No. Okay. Tell me what it means then. Tell me what I'm dealing with here. This candle opened at this price, and it closed at, or it had a swing high at this price. 1.33757. Oh, okay. So I was right. Okay. All right. Okay, so all right. That sounds like a lot. 450 pips. How much is that worth in dollars and cents, and how much does it cost a trader to put on that kind of a trade? And whereas we trade contracts in the futures market, I believe in Forex the terminology is lots. And then I think there's like mini lots and micro lots. So the slingshot, we had a bullish cross, price pulled away, price pulled back. We had an up close. You would buy the open of the next candle based on bullish divergence. No need for a trend line because the cycle stays blue. Goes from 133. There's got to be a better way to say that. It goes from 307 to 757. 450 pips on a 4-hour chart. So what's that worth in money? Does anybody know? We can Google it. Okay, the micro is 10 cents. Pete says even at $1 a pip, it's profitable. Well, okay, CW says the mini is $1. Okay. Okay, so if we were trading the mini, okay, the standard is 10, the mini is $1, and the micro is 10 cents. Okay. So how much margin is required then, CW, to trade that mini? Because you mentioned that the startup cost was low, that you can get, you can open an account for $1,000. Okay. If there's anyone who knows, well, you can probably Google it. Now, in case you guys don't know this, with Chrome, you just start typing up here. You don't have to go to the Google page. Margin requirement for Euro USD. Formula. Okay, USD based pair. Formula is 100,000 times 2%. 2,000 in margin required. Well, I guess you couldn't trade that with a $1,000 account. Let's see if we can find a better explanation. Let's try this. Nope, they're talking foreign currency there, so that's not going to work. Right here, I think this is partially why I've shied away from Forex, because getting a straight answer seems to be, I don't know, I don't want to be judgmental. Now, what would be the margin requirement in US dollars? Great question. Let's find out. Welcome to X4X Broker Free Forex Education. Okay. Margin as a ratio, 50 to 1, 2%. See, why can't they? Okay, let's take an example here. You have a leverage of 100 to 1 with a balance of 5,000, and you go long one standard lot on the Euro USD at 134.36. What would be your margin? Now, wait a minute. We got one more digit than he's got. See, 134. See, we're carrying one more digit than he does. So I'm not sure that's 450 pips, to be honest with you. Maybe it is. Alright. One standard lot is equivalent to 100,000 base currency units, BCUs. 101 leverage is 1%, so 1% of 100,000 BCUs would give you a margin requirement of 1,000 euros. Now, please take notice that the base currency unit is always the first currency in the pair. In this case, the BCU is the euro. Therefore, every standard lot you take a position in, you'd be required to put up a margin of 1,000 euros. Now, what would be the margin requirement in US dollars? Well, we would have to simply convert the 1,000 euros to US dollars using the exchange rate of 1.3436 where we went long. So in US dollars, your margin would be $1,300, 1,343.60. There you go. Oh yeah, it's so easy. So for each standard lot you take a position in for this pair, you'd be required to put up $1,343.60 as collateral or margin. Now, why is margin so important? Technically, with $5,000 you can buy 3 standard lots. So in essence, you're putting up a security deposit margin of $4,030. So to control 3 standard lots at one time, okay. So for instance, we are long 3 standard lots at 134.36, and the Euro USD moves upward to 134.66, and we sell our position. That's a 30 pip move at $10 per pip with 3 lots. That's a profit of $900. 3 standard lots times $10 per pip times 30 pips of movement. Similarly, a 30 pip downward movement would result in a $900 loss. Here's a very important lesson so you do not get caught with a margin call. What about if you were trading micro lots? Well, that just breaks it down to a dime. Okay. All right. Well, I can see that our methodology, can work in this market. I would just have to figure out. Let's see, on this one, on the pullback here, it turned red, so you got to have a trend line. And of course, we don't have an up close above the trend line. We don't even have an up close. Now, we're also running on a 4-hour time frame. Let's back up, see what we got cooking over here. Bearish cross, price pulls away, price pulls back. So this is the candle we're working on. We look down, we've got bearish divergence. The cycle is red and below. We don't need a trend line. But this down close, this is a huge candle. And so this candle opens at 132.58. Drops down to 132.34. I think we have to just drop that last digit. I'm sure it gets calculated in there, but so this worked out okay. I mean, you'd be selling the open of this candle. It looks like it's I'm guessing a 30-40 pip move. Well, over here it says from 400 to 600. I don't think that's 200 though. I think it's more like 20. And I could be completely wrong. Maybe I'll invite my friend Dave Floyd, who I haven't talked to in many years. Maybe I'll invite him to come to a radio show. So this would be, I'm guessing, a profitable move. Let's back up a little further. Bullish cross, price pulls away, price pulls back. We look down here, we've got bullish divergence. We don't need a trend line, we simply need an up close, so we would be buying the open here. And then this wick tells me we've got some drawdown, and then a nice move to the upside. This is an example of when you hear me say that markets are fractal in nature, and you can take our methodology and apply it to any market, any time frame. I guess this is about as good as an example as we're ever going to see. Let's see what happens if we knock it down to a 4-tick range. Range bar 1, 2, 3, 4. Okay. Whoa. Okay. Well, we finally got a pull back there. But we need a trend line. Not a very good trend line. Yeah, you get the point. Come on, Dwayne, you can do better than that. Alright, whatever. So, there's a few candles of upward movement. I just don't know. Yeah, we're gonna have to get somebody on here that can give us the answers instead of me guessing at it. Oh, Mario says the ES triggered. Let's go take a peek at that. Thanks, Mario. Hey, Mario, you're not the Mario from Spain, are you? I already asked you that question before. Pete says it's 45 pips in that move. I just brought it up on my old Forex platform. I too was going to trade Forex, but found the Eminis and have been hooked ever since. Yeah, that's kind of what happened to me. But I do know that there's a lot of people out there that that do trade Forex and have an interest in it. And I mean, we just had a pretty good schooling there that, I mean, our stuff works only because the markets work. I mean, as I always say, as long as it's an auction style market where there's people on the bid and people on the ask and price channels back and forth, There's just something about, see, look at these times here. 13:44, like from here to here is 2 minutes. From here to here is 2 minutes. So there's a bearish cross, a pull away, a pull back, bearish divergence. So that's a trade right there. We would have to look at it during a time when the market was active. It looks like it's pretty active right now on this time frame. Yeah, this looks jumpier than crude. I guess we would have to take this out to a larger. Just double it for a minute, see what that looks like. Never got anything here because you didn't get an up close. Here, there was no pull away. Now, I'm not seeing the setups here like I was on the 4 hour. I mean, there's a trade there. That's perfect. I mean, bearish cross, price pulls away, price pulls back. Got bearish divergence. All you need is a down close, so you're in this thing right there for that move down. Okay, guys. I mean, we'll do some investigating. I'll ask Dave if he wants to come on the show and talk to us. You can trade Forex through Daniel's Trading. Your account has to be enabled for it. Apparently mine is, even though I'm running my demo. I know it's enabled on my live account as well. So I just haven't traded it. Let's see. Jerry says if you put 2,000 in per trade, then each pip is worth $10. Okay, I guess that's the standard lot. Okay. Okay, Jerry says, I think the Forex will be good for swing trade, which is more like your method rather than the slingshot. Okay. Mario goes, no, I'm not the guy from Spain, but I am going to Spain soon. Well, would you say hi to the other Mario that I've been trying to... He wanted to become a partner, and then we lost contact. He's a missionary right there where he lives. An evangelist, I guess is a better term. He's an evangelist. Dwayne, try your old 233 tick chart on it. Okay. Why not? Tick. Oh, what do we got there? Well, there's a bearish cross. Price pulls away. Price pulls back. Down close. Oh, but you don't have the right divergence. Offhand, I'll say I'm not. That 4 tick range looked. I mean, the 4 hour that looked really smooth. Honestly. I'll have to get the numbers in hand before I can. But I mean, look at that. I mean, Well, yeah, but you got to wait for the down close, and so it doesn't leave a lot in there. This one, on the other hand, does. I mean, people already say, my goodness, you guys have so many markets going on in the live trading room. How do you expect somebody to learn this? And then we explain, well, you don't have to learn all the different markets. You just have to learn the one setup. And you can apply it to any market. I can only imagine if we throw Forex into the mix, people will really think we're nuts. Now, at least I know there's an interest from you guys, so. Well, and we had put together a thing with a Forex firm some time back. They dropped the ball. They had some kind of an automated Forex thing they wanted us to show to our audience and to our partners. And we thought, well, it's a non-competing thing. It's Forex and we're futures. And then those guys, I don't know what happened to them. They were a very reputable firm. They came highly recommended, and then something happened. I don't know. They've kind of dropped off the map. So things happen. All right, our friend the ES triggered at 35, and then it bounced up to 35.50. It's had a low of 34. Okay, the high of this candle is 35.50. The low of this candle is 34. What does the slingshot look like? The slingshot, there's no trade at the moment. That thing's been trending down for since 16.50 and a quarter, we'll call it. It's when the sellers took over on this time frame. 16.50 and a quarter. Wow, 16.50 and a quarter? That's way back up here. Look at that. On the 4-tick range chart, sellers took control way up here. But it dropped so quickly there was never an entry. Whew, almost right there, right there. I guess there was right there. Right after the cross. Okay. There's the cross. Price pulls away. Price pulls back. Oh, we already talked about this, didn't we? Or did we? No, that was the goal we were talking about, wasn't it? Okay, well, on the pullback, the cycle is blue. We have bearish, but it's blue. So we've got to draw a trend line. And so the close below the trend line, so you sell the open of this candle, which would be 1647.75. $1647.75. 1647.75. Okay. So that's where the sellers took over. this is where the slingshot gave you a trade. Slingshot entry. Right there. See guys, it's just the same thing over and over and over and over. Every day is unique. Every moment in the market is unique. But if you step back and take a look, it's the same thing over and over and over. Each one its own unique variation, kind of like a snowflake, but they're all snowflakes. So the sellers take control here. The slingshot gives you an entry here. And this is where we sit at 1634.75. Which tells me my little line is one tick off, I guess. There we go, 1635. All right. Well, listen, guys, I've enjoyed hanging out with you again for a second time today. Pete says try the 466 maybe. No, I'll do that tomorrow. I'm gonna run. All right, guys. I tell you what, you do it, Pete. You try some different time frames if you're interested in that, and then send me some screenshots, and we'll take a look at them tomorrow. I'll bring them up on the radio show, and then I'll think about emailing Dave. See, the last time I'm gonna be honest, I flaked out on Dave. The last time I invited him to come on the show, he said, "Okay, I will," and then I failed to call him for like a day. And then a day became a week, and then I think I was embarrassed, and I didn't call, and so now it's been a few years. So I mean, I can always open up with an apology. Hey, sorry I didn't get back to you, and can we start fresh? I just remember him, and I know he's been on CNBC. Somebody the other day on the radio show mentioned, because they knew me back then, and they remember when Dave came on the show, and they mentioned they had seen him, or no, they saw his partner. He's got a business partner at Aspen. He saw his partner on CNBC. Oh, Jerry says Rob Booker. Oh no, that's a different guy. That's not Dave's partner. You know, Jerry, I did hear from Rob the other day. I didn't hear from him for a while, and then he sent me a tweet or something the other night. That's the first time I heard from him in a while. So I'm not sure what. I don't know. Do you know him, Jerry? Do you know Rob? Have you taken any of his training or anything? Just curious. In the tweet he sent me, he said he was going to be in Phoenix towards the end of the month, and he would like to get together for lunch. So I'll probably do that, and I'll probably meet with him for lunch. Okay. All right. Okay, guys, that's it. I'm really done. I could hang out here and just shoot the breeze all day, but I got to go do something. I don't want to. I almost said I got to go do something productive, as if sitting here chatting with you is not productive. Well, it is. It's totally productive, all right? But nonetheless, you know what I mean. When later when my wife goes, "Well, honey, what'd you do today?" "Oh, yeah, I shot the breeze with the guys." I'm sorry, you did what? Yeah, right. So, you guys probably need to do something too, right? Go to the gym. Go take a walk. Get out from behind that desk, man. Seriously. It's not good for you. I'm thinking of putting a treadmill behind my desk. What do you think about that? No? That would last about 5 minutes. Actually, when I was going to the gym regularly, my wife and I enjoyed the treadmill. I'd put my earbuds in, I would have some podcasts loaded up on my iPhone. I would pop in my earbuds, and I was completely at peace for 45 minutes. I walked at a pretty good incline. I mean, I wasn't running or jogging or anything. That's a young man's game. But I was walking at a very brisk pace at a pretty steep incline. And I was breaking a sweat, trust me. And I really enjoyed that. And I felt really good. And I don't know, why did I stop doing it? I guess because we're lazy. People are just, I don't know, this people. I'm not lazy when it comes to work. I'm a workaholic. But when it comes to going to the gym, I guess I'm lazy. So, all right, another page from my life. All right, guys, I'm out of here. I got to go. I'm going to turn you back. I'm going to return you to our regularly scheduled programming, and I'll see you all tomorrow. All right? All right. This guy that's preaching right now, Mark Driscoll, he's really an interesting guy. He does mixed martial arts. He's a kind of a man's man. So you can check out his church. It's called Mars Hill Church. They're up in Seattle. And I've got a lot of his stuff on the radio station. So I'm going to send you back to him, and I'm out of here.
To regularly gathering with people in church someday, today. You don't commit yourself to reading the scriptures as Jesus did someday, today. You don't determine that at some point in your future you will overcome your addiction and your sin and your pride and your slavery and identity issues related to your sin or sins committed against you. That day is today. You don't confess the deep, dark secrets of your heart and your mind and your life someday. That day is today. And the Bible says, if today, this day, today, you hear His voice, please, for your soul, for your salvation, for your joy, do not harden your heart. Do not harden your heart. Father God, I pray that we would seize today, that there would be a sense of urgency about us individually and corporately.